Welcome to another episode of America in Black and White. Um, I want you to welcome to another episode. Today we delve into the intricate world of finance, investments, and savings with an esteemed guest, Christoph Ingram. Join us as we explore the insights and expertise he brings to the table, shedding light on the principles that govern our financial landscapes. Um, our guest is Jamaican born. He migrated to the States at a young age. Educational background. He went to Howard University, transferred to graduate school at Florida Atlantic International University with a bachelor's degree. His professional experience is he's a financial coach at Financial Clarity Academy, LLC. He has 3 years of experience. The CEO of Financial Clarity Academy, LLC. 7 years experience investing in the stock and cryptocurrency market. His Financial Clarity's mission is to use their knowledge, experience, tools, and resources to help as many individuals as possible develop a solid saving and investing systems that will allow them to build enough wealth to live a stress-free retirement lifestyle where money isn't a worry for them. Ladies and gentlemen, I introduce you to Christoph Ingram. Hello,
Good evening,
Christoph.
everybody.
How are you doing?
Doing good, doing good. How about you?
I'm doing excellent. Thanks for being a guest today on the show. If you want to start, do you want to tell our audience a little bit more about yourself and who you are?
Okay. My name is Christoph Ingram. I was born and raised in Jamaica, migrated here when I was 14 years old. I had a tough financial upbringing. So throughout my college experience and after, I decided to get into finance. I've been invested in the stock and cryptocurrency market for over 7 years. I developed a passion and I saw what that invested knowledge could do for me and others around me that didn't have that knowledge. So that's how I started Financial Clarity Academy in attempt to help, a lot of people that don't have, give a lower margin of entry for financial education per se. So,
Okay.
yeah.
So our audience can engage a little bit about what you do. So tell me this. So let's say if they wanted to start their journey towards
Right.
financial clarity, what is it that they can do, and how can you advise them as to how things work when it comes to investments?
Okay, well, it depends. It depends on their age. It depends on their financial goals for sure. But one thing I love to say that will work for anybody is paying themselves first in a tax advantage retirement account. So if for someone looking to start their journey for financial independence, there's a lot of, gurus out there that say, you should not invest money in a 401k. You should not invest money in a Roth IRA. But I think if an individual could put away no less than 10% of what they earn in a tax advantage retirement account like a Roth IRA, in a low cost ETF or index fund that mirrors the stock market, I think that's a way to financial independence.
So how does the cryptocurrency work?
Okay. So when it comes to cryptocurrency, um, Bitcoin, Bitcoin, the blockchain, right? It's more of, say, the blockchain technology that most of the hedge funds and banks are interested in. But Bitcoin is digital currency, right? So it's looked at as digital gold. The only thing is it's capped, it has a lower supply, right? And it separates, it makes it easier for people to move money around without the bank being involved, without a third party. So the good part about that makes that, bullish going into the next couple of years is because it's technology, right? So it's like it's just a underdeveloped space, but it's definitely technology. So it's just made to, move money around as a form of currency. It's gonna be looked at as a form of value exchange per se.
So, like, what about if people have a little skepticism when they look at what happened with Sam Bankman-Fried?
Right.
So, how would
So,
you tell them
mhm.
about how that works?
So, well, ever since my journey, I started investing in cryptocurrency in 2017, 2016, 2017. I bought about 4 Bitcoin at $1,000. And ever since I got in, there's a lot of different scams and frauds in the space because it's new and it's not regulated. But for the names that are in the top 10, those names always give, a good return when the bull market comes around. So when I got invested in 2016, 2017, I got a huge gain when they have something that comes up that calls a crypto halving. That's coming up this, April 22nd. They limit the amount of Bitcoin being mined on the blockchain, which give a supply and demand chain shock. They do it every 4 years and they send the currency higher. So when I got in at $1,000, it ran up to 20,000 by the end of 2017. I got in, I learned all the education I can. We have 4 major market cycles. We got the early trend, the first start of it, which we're in right now. We have the parabolic trend, which happens after the halving. We have the bear market, which comes after everything goes up. Then we have accumulation phase. So we've been in a long accumulation phase since 2021, 2022, and we're breaking out of that phase now, going into the bull market. So we're back at the front of the start cycle, and the halving should trigger that off. So I would say to stay away from fraud and scam in that space, you need a secure brokerage to invest in. Coinbase is pretty secure. They're listed on the stock market exchange, and you can stick to the top 10 currencies. You can do your due diligence, but every 4 years, it's the same cycle. It's built in the economic system per se. So right
So,
now I'm looking for Bitcoin, Ethereum, and the top coins like I'd say, Cardano and Solana to keep making more gains going into 2024 as more adoption comes in, people start to hear about the space again, more optimism comes in about the space. So I'm looking at it as a long-term investment game, but also looking at it as a turn of play, I'd say. Like,
so those top four markets that you mentioned, what are the names of those markets?
Um, the top 4 cryptocurrency markets or stock markets or cryptocurrency, I'd
Yes.
say Bitcoin, Ethereum for me, to be honest, it may sound unrealistic, but I could say it bold. Ethereum by 2025 should be no less than 12K minimum, right? Based on the current market cycle. So I'm betting big on Ethereum. It's 2,300 per share now. The last market cycle in 2020, it was about 400. It ran up to 4,000. We made a correction down to about 1,000. Now we're in the 2,000 range, getting out the accumulation phase. So I expect us to go to about 12,000 this by the end of 2025 as the market go, right? Because right now we're in the midst of the ETF getting approved. If the ETF getting approved, which is so far a 95% chance, it will open up floodgates of trillions of dollars to come into this space. So for people that's holding money in their retirement accounts, they can start investing in Bitcoin through the ETF now in a regulated way. So what, like you're saying, the Sam Bankman situation, that won't happen to ETF holders because it's regulated by the SEC. So they
Oh,
can't lose money on the downside.
okay.
So the top 4 markets I'd say is Ethereum,
Okay.
Solana. They all have the same smart contract technology that people can build other cryptocurrencies and NFTs on. That's the major catch.
Okay.
Cardano,
Okay.
XRP, right?
Okay.
And XRP mainly for the longevity and the strong community. Cardano and Solana. Solana has a cell phone, right? And Cardano, they allow other people to build other cryptocurrencies and NFTs on the platform. So it makes them more valuable. So it's like they're the supplier, and the space is very early per se.
Okay. So,
Mhm.
is there a minimum amount that people need to have to invest in cryptocurrency?
No, you can actually start with $10, $20, as low as you want. I'd say what you put in is what you get out. And if someone is skeptic about the space, I'd say they should start with a lower amount and see and watch as it gain. But there's no minimum cost of entry at all.
Okay. And so tell me a little bit about tell the folks about what makes Financial Clarity Academy LLC unique.
Well, what makes us unique, right? We focus on actually developing good traders and investors of the stock market, right? So we're not necessarily focused on giving anybody signals or tips. We're focused on educating and basically holding the academy members' hand and bringing them from A to Z. So we focus on giving them the full knowledge, and it's broken up into different Zoom calls weekly. Where I stay in touch with them. I keep them educated. We stay up to date with market trends, current analysis, portfolio management, etc. So that's the main thing I would say. I'd say different from the other communities that are saying okay, you know.
Okay. And so when you talk about you guys have the investors and how they move this money around, do you guys actually do work on the actual stock exchange, like in the New York Stock Exchange, the Dow, any of that? You guys don't deal with any of those?
Oh yeah, yeah. So in Financial Clarity Academy, we don't touch anyone's money. We
Okay.
educate all the members on how to use their money to make different investment, different plays. So, for instance, right, technical analysis, which is using chart patterns and chart analysis and patterns to predict future moves, right? We use technical analysis to get in the best entries and the best exits on the market. Like recently, Nvidia, a stock. Nvidia is at 540 per share now. It recently took a dip down to 135 in 2022 summer. So that was a good stock to buy on the dip based on it being an AI play and its strong financial sheets. So in terms of in terms of stocks, right? Um, the difference is in terms of buying and holding work for everybody, right? Buying and holding will work for everybody because it's built in the economic system and inflation for stocks to go up over time. So if you're going to choose good companies like Apple, Microsoft, those companies will continue to go up because they'll continue earning revenue. But if you're trying to pick a company, I'd say for someone or look for something to put your money in, you would want to first look to see if that company has positive cash flow and good margins, low debt. And those are normally the companies that bounce when we get the dips, when we get those red days. So, yeah, definitely we educate others. Investing in ETFs is easy. The healthcare sector, tech sector ETFs, long-term bull market. They're at all-time highs right now, regardless if the market came down. So healthcare will always be booming in the US and tech, So ETF side is easy. We teach investors how to take advantage of the market volatility.
Okay.
Mhm.
So, how do you guys get access to that information? So, let's just
Mhm.
say if our listeners out there, because at the end of the show, I mean, I'm definitely going to give you the opportunity to let them know
Mhm.
how they can connect with you. But let's just say, if they want to connect with you and you got this information that you say you train or you teach people how to become investors, where do you get that information from?
Um, so that information is developed from my 8 year of experience and the hundreds of books I've read on trading knowledge and compiled over from different resources. So I have resources that allow me to see different stuff. I can see the trades that the big politicians are making. I can see those informations. But most of the analysis and tools and resources that we use is based off history, based on repeated patterns. It's mostly technical analysis. The platforms for fundamental analysis and economic analysis is really easy to find, and we combine it together. So that information is developed. It's day to day, like it's day to day. Um, the trading and investment knowledge is gained through the years of helping others, helping hundreds of students how to trade the markets. My personal experience of trading the markets as well. So, if that answers your question.
Okay. So, uh,
Mhm.
are there specific investment opportunities that you can recommend or that
Yeah.
you like at most? What are those?
Okay. So, right now, Tesla is for me one of the biggest investment opportunities over the next 5 years, right? And simply for these reasons, their cash flow statement is good. They have a lot of money to scale, and their new products and patents, right? They have the Tesla robot coming out and autonomous vehicles in 2024, and they're expanding in different countries. And Tesla is on their way to being the most cost efficient electric vehicle in the United States. So currently, anticipated 7% of the United States is using Tesla. And by 2026, 35% of Americans are anticipated to be driving Tesla. So the share price is currently around 238. I think Tesla could easily get back to $1,000 within the next 2 years. It went up to $1,000 already and split. And it's not necessarily because of them cash flowing in alone. It's just the FOMO. When investors realize that the share price is going up, a lot of people want a piece of that action. So I think Tesla for the stock market is the next big play for the next three to 4 years. You know, with the robot coming out, cars being cost efficient, the trucks, self-driving autonomous vehicles, you know, and he's partnered with some of the most powerful people, you know, in the world in a certain way. So Tesla for me for stocks, and then Ethereum for me for cryptocurrencies. Those are the two biggest investments I think for the next 3 years. Buy and hold. Buy and hold.
So when you say he, you mean Elon Musk.
Elon Musk. Exactly.
Okay.
Yes. You know, I didn't even say the name. He's so popular these days. I just say he.
So tell me, how do you how can one stay updated with these financial trends?
Okay, well, there's one thing. I have a platform that's called Finviz, FINVIZ.com, finviz.com. Once you go in the browser and click news, you can get all the up-to-date financial news to see what's going on in the economy. But there's other platforms such as forexfactory.com. You can also go to that calendar and stay up to date with all the major economic news like unemployment news, CPI inflation news, and the FOMC news where they cut interest rates. And the reason why I'm telling you guys these platforms is because it's been a news driven economy since inflation ran up. And since inflation came down, as it was going down in 2023, the stock market has been going up, right? Because it's been creating a lot of optimism. So now the major thing we're looking out for is the interest rate cuts, right? As they cut rates, you know, I expect the demand to pick up back, you know, in the real estate market and the stock market. So I'd say forexfactory.com, finviz.com is a good place to keep up to date with the news. But in terms of being on the markets day to day, you know, if you want to look into trading, you can have a charting platform, tradingview.com. You know, tradingview.com allows you to type in, you know, Apple. You can see the price chart. You can type in Microsoft. You can see the price chart, right? So it's a few resources that go together to make you get the best investment results per se.
Okay, so let me just ask you this. Oh, wait, there's a question here. Is
Okay.
there a certain amount you need to start investing in the stock market, or is there a certain number of stocks you have to purchase to start?
No, you don't. So in the stock market, you could just open a simple brokerage. Charles Schwab is a very reliable brokerage. Fidelity is a reliable brokerage. Robinhood is pretty reliable. I use Robinhood. And you can purchase increments of a stock, or you can purchase a whole stock, right? So for instance, for a growth stock, for example, Uber is about $57 right now. Uber's cash flow been growing steadily year over year. They're finally in profitability. When they just got out, they were negative as they were scaling. So over the next 3 to 5 years, I see Uber going higher as well, and that's like $57. So if you're going to look to invest in the ETF, and what the ETF is, it's an exchange traded fund, right? It trades on the market. It's a little different from an index fund, but it's the same, right? Per se, it's a basket of stocks, right? So Vanguard Total Stock Market ETF, VTI, ticker symbol, VTI. Them, if you invest in them, you get exposure to the overall stock market. Apple, Microsoft, all the top companies, 500 companies. So that's just investing in the S&P 500 like how the 401k does, right? So I'm just giving you guys, giving you two ways to look at it.
Okay. So,
Mm-hmm.
is there a way, let's just say, for those that are on the lower end that want to try to start this,
Mm-hmm.
is there a particular recommendation that you think that they may want to look into first in the beginning where they're not losing money, but something that could be profitable for
Mm-hmm.
them?
Okay. Yeah, definitely, definitely. So let's start like by saying this. Crypto is volatile, right? So since you guys have to, grow your learning curve, I'd say crypto is a great place, but we'll leave that on the back end. Uber is a growth stock, right? So those stocks reinvest all their profits to grow the company bigger. That's what a growth stock does. So invest in a value stock right now, a company that pays dividends. Those companies are more stable and they give less downside. So I'd say a company like Verizon is a good company. Reason being, it's in the communication sector and they pay a hefty dividend. They pay about 6% yield. So you get that 6% regardless if the share price go up and down. It's about $35 per share right now. Um, if I look at it, I got to look because it's volatility. There's
Hmm.
a platform I use called stockanalysis.com, right?
Okay.
When you go on stockanalysis.com, you can type in the ticker symbol at the top. So I'm going to type in VZ now for Verizon. So when I click on it, it shows the financial statements and everything. It's $39 per share right now for Verizon. And I click dividends, and the dividend is 6.8% per share. So you get paid out every 3 months. And it shows up just like this if it could show stock analysis. So
Oh,
just showing for the viewers.
so that would
Mhm.
actually be, I guess on the low end, something that's probably steady,
Yeah,
uh, that actually flows, and just over a period of time, let's say those three to
it
6 months,
compounds.
so forth, you get some earnings back.
Right. It compounds. That's definitely something very low and very steady. It doesn't really put much risk for you on the table. It's more upside, right? Another investment I could say look into that's pretty solid. We have I like REITs as well, right?
Okay.
Simon Property, Vichy Properties, right? The main thing with REITs is we want to see growing cash flow as well, and we want to see 100% occupancy, right? Because REITs is investing in real estate online. So I'd say the DEA, right? Easterly Government Properties, DEA. I like DEA because they're $13 per share and they pay a 7.8% dividend. So the thing with DEA is the government properties, they have long-term leases because they're owned by the government. So that's the trick there with that one. So DEA $13 per share, there's 7.8% dividend yield. You get that regardless, right? So you get your 7.8% regardless if the share go up or down. It's $13. So
Oh
in terms
wow.
of stability, right?
Right. Yeah.
Yeah.
So that's slow and steady, but it's rising.
Right. You're getting your compound interest. You're getting your if you hold it annually, you can put it on dividend reinvestment. You buy more shares, literally get it reinvested. Your money start growing faster.
I mean, but you would do that. But is it true that when it
Mhm.
comes to doing that for the reinvestments, that's basically what you do initially with your brokerage when you first open the account, right?
Yes. So you could set it on dividend reinvestment to keep getting the compound interest, but a little different is one thing I would say that someone that's really serious that's trying to get to the next level that's not trying to trade daily should do is set up their account on automatic deposits. So if they're willing to put $30 per week, it doesn't have to be nothing big, $20 per week, and let
Right.
it get used to paying themselves repeatedly in a good brokerage account like a Charles Schwab or a Roth if they don't have one, right? Already they can open a Roth and just buy these properties or buy these REITs, repeatedly and keep compounding. And over time, without you checking it, the money will literally, keep compounding, keep doubling.
So would this also mean you saying with the automatic deposits? Is that something you would set up with the brokerage where they would do an automatic withdrawal from an account to fund that?
Yes. So to be fully clear, I have Charles Schwab. So every Friday, right? So every Friday, $50 comes out of my account and goes into my broker. So now I come, I'd say once a month or so and go in and say, okay, I want some more Tesla shares because I'm big on that. Let me buy more Tesla in my Schwab. Yes, I also have exposure to AbbVie, Johnson and Johnson, those good companies, healthcare companies that also pay a dividend. But definitely buying my growth sector since I am still, early. I'm just 31, just on 31, early 30s, so I can be aggressive with growth.
Right.
So yeah, so get that automatic deposit and go in and start making your investments, because especially for someone that doesn't have a retirement account set up, this is very, very important for them. It adds diversity to their wealth. Even if they want to start, have rental properties or a business, it still adds diversity to have that, capital growing in that area as well.
Okay. And so, what role does financial literacy play in achieving success?
Oh, I think financial literacy is probably the most. That's why I'm in the space. I think it's the deal breaker. Like, especially growing up in the environments I was growing up, being in Jamaica, low income environments, migrated to America, also low income environments. I didn't have that much financial literacy until after, going to two colleges and all, because I was the athlete. In the low income environments, people normally know sports as a way to get them out, right? So I'm a soccer player. I got a full scholarship to Howard University. Went there, played for 2 years. They're a very good school, very good community. Love the relationships there. The thing is, I wanted more out of soccer, and they were Division 1, but it wasn't their main priority. It's more of getting your grades good and stuff like that. So I took a transfer to FIU. I was down there for 2 years. I did get a chance to play for the Jamaica national team, a few years. Some USL pro teams in the United States. I went to Colorado Switchbacks and OKC Energy, Puerto Rico FC, just for a short time until I ended my soccer career there and started pursuing finance full time. So I'd say throughout that time, soccer got me into a better environment to increase my financial literacy per se. If I didn't get out of my environment, I wouldn't know, which direction to go. Right now, I just saw the question. I'm sorry. So financial literacy is everything. I read a lot. I encourage everybody to read a lot. Everything you can get your hands on financial, not just investing in stocks. Knowing how to keep your credit good, getting your taxes on point. Knowing how to use debt to your advantage. Like, everything financially can help you. It all pieced together to help you to be a better and more effective person in general, per se.
Well, our next question here that's in the chat is, can you explain what is blue chip stock? And secondly, I'm 60 years old. Do you think a person at this age should be going aggressive trading or what?
Okay. Well, a blue chip stock is the stocks with over, I'd say, 500 billion, market cap. Like, they're pretty big companies, right?
Like
Some
Apple.
of them pay a dividend, some don't, but those are blue chip stocks. Blue chip stocks is an example of like Apple, Microsoft, Johnson and Johnson. They're blue chips. They're very known, and those stocks tend to give good returns. I would say over a 10-year period, stocks return an average of 10 to 11%, they say. But I think now in the future, with more money involved, it's returning more, right? When it balances out. So I'd say it depends on which blue chip stock you invest in, and which time you get in. You can get more percent gain out of there. And in terms of trading does take a learning curve, right? It depends on your personal situation. It depends on if you have time to sit down and actually start learning, all the terminology, how to enter and exit the market, how to use the platforms. So I definitely think at 60, you shouldn't be going aggressive, to answer that part of the question. At 60, everybody have to be conservative, because the goal is still to keep money. You want to learn how to keep money and make more money as well. So going conservative and staying effective, staying healthy, taking care of yourself, and still going could get you somewhere as well.
So what
Well,
about if it was moderate aggressive?
moderate aggressive work. I think moderate aggressive is good. I'd say 60-40. I'd say 60% healthcare sector, over, and then overall stock market. When I say that, I mean something like this: VTI, Vanguard's total stock market, or VOO. I know a lot of people hear about VOO, VOO, right? For the S&P 500 overall stock market. So I'd say VOO would be about 25, let's say 20% VOO, 20% XLV, which is the healthcare sector, right? And 20% tech sector ETF. If you do something like that, and the next 40% could be, it could be something, just some dividend stocks, some Johnson Johnson or VYM, Vanguard high yield dividend stocks. That's moderate aggressive, because tech sector ETF still gives you a few distant, and you can have a separate 20% of your portfolio to just invest in individual stocks, growth. Stocks are going to do good over the next 5 years. DoorDash, Uber, they have growing portfolios. I use DoorDash a lot. Sometimes I'm here, and it's the same thing, not much difference. So yeah, I always encourage everybody to try to invest for some growth as well.
So I want you to take our listeners through the concept of and some examples of the financial sector or market, the investment sector or market, and the savings market. How do
Okay.
you correlate those three together, and how do you make them work? Especially if we're
Mhm.
like we got a lot of people that are actually starting from the beginning that wants to grow.
Okay. So to correlate those, I'd say to look at it like this. It all depends on your goals, right? So in terms of savings, we got high yield savings account, we got regular savings account, we got CDs, which are fixed savings account for a certain period of time, right? We got money markets. But the thing I have a problem with money markets and CDs, yes, they don't give volatility, but they give a very small return, and they like to lock up your money, right? High yield savings, you would use a high yield savings account or a CD account to save money if you're looking for a short term purchase. Like if you're looking to buy a house within the next year or 6 months, and you don't want to touch the money, you don't want it to go down, but you want money to grow on it. And you'd use an investing broker, like a stockbroker, a Schwab, to build wealth if you're looking to invest to grow over the next, 2 to 5 years, or you're looking to trade in and out the market. So I'd say how you put them all together is, one, you need a retirement account or a savings plan to put some money away for some tender years, whether when you're older or for a purchase or whatever you need. You're just going to have money in this account, right? I advise the longer you keep it, the more it compounds. Second, you need an emergency fund, right? Your emergency fund of $1,000 or more. They said no less than $1,000 works, right? You could put your emergency fund in a savings account, right? Or a high yield savings account. And then you can have, um, in terms of the financial sector, what you're talking in terms of investing or in terms of, okay,
Just overall.
okay. So yeah, definitely needs to have your retirement account, your deposits going. Definitely need to have a emergency fund just in case something comes up. You don't want to stop your investing process, right? You want to keep everything keep going, right? And you want to build a habit of investing. And overall, right, the US economy, the stock market is built to go up over time. Like I've said this before, we've recovered from all crashes, and it's not just the market crashes why we recover, right? It's
Right.
built in the economic system, right? The Federal Reserves, same like how they printed a lot of money for us in the pandemic, they can do that at any moment, and they want the country, right, to keep running good. So right now, as they cut rates, that's basically turning on the money printers again. Stocks will keep going to new highs. Inflation is going to stay steady at 3%, and we're still going to go. So you don't have to worry when it comes to investing in like the S&P 500. You don't have to worry about, oh, what if my money go down, or so forth. So I'd say that to keep it very simple, definitely have that retirement account, have that emergency savings. If you want to be a trader now, if you want to have a separate hand, a separate $1,000 or $2,000 that you're gonna swing trade in the market, that's different as well. So you'd have to separate all those three just like that, if that answers your question.
Okay.
Yeah.
Now,
Hmm.
can you share a pivotal moment that led you to your career in finance? What was a pivotal moment that got you here?
So all right, I'm gonna tell you the pivotal moment, but it led to this. So growing up, coming to America, as I said, it wasn't the easiest financially. And honestly, if it wasn't for sports, I don't know how I'd go to college, right? My dad was the only one working. My mom had to migrate after, and we had to, he was in and out of jobs. We had to move in even with his mom at one point, right? So I've seen the roughness of the financial situations by not being financially literate, and even people that live here don't know or don't know how to get access to these things like the stock market investing, right? So he had a job eventually, right? That never had a retirement account. And now my dad is 71. He retired, and his retirement savings is almost done. So seeing that, he's basically done, basically, right? Seeing all that, making me realize that if I can hop in, I know what I went through. If I can hop in and help a few people out with this, right? While, living out my purpose, this could be, this would make me feel good in myself to help people to avoid this situation, right? A pivotal moment for me to led me to my career is when I got into investing in Bitcoin in 2017, and I bought three three at 1,000, and I trade it ran up without me doing anything to 20,000 each, and I made like one or two trades, and I end up with 80,000 in the span of, I'd say, like 6 7 months. So I was like, whoa, this is, obviously we don't get markets like that every day, but I got in at a really good time. So when I was like, whoa, this can really, help people, you know change their life, even if it's not this much gains. Like, what I'm used to is people are just working, living paycheck to paycheck. They're just living. No one's talking about investing. No one's talking about, none of the above. So in my community growing up, I'm saying I have this knowledge. I got exposure to this. I invested more money in my education to learn more about everything else, to make sure I could shift over into my career to help others do the same. So I'd say, like, the gains I got from it as well, the personal development, just made me realize that was a big shift, really, when I saw that.
Oh wow. So what inspired the establishment of Financial Clarity Academy LLC?
Right. So um ever since, so in the same pivotal moment when I made that money, I wasn't working, I wasn't doing nothing for like a year. I was simply home learning how to trade the market back and forth, and I'm saying, okay, I want to actually figure this out. I want to be able to do this. So I dove down in my education. So this was something that I wanted to do from about 2017, and I didn't start doing it till about 2020. 2020, the crypto bull market came back around again, the same one that made me make that 80,000, and that's what pushed out Financial Clarity Academy for sure, because a lot of people kept inquiring. I had soccer group chats, people that I was telling to buy at the right prices, because I was always doing technical analysis, helping people out regardless. And upon helping a lot of people out, seeing the results that they're getting, and upon me investing thousands of dollars in my education, um, I saw this as a way to help others people enter the space at a very, very low cost, right? So to get me to teach anybody to do this is less than the cost of a grocery ticket. You know what I mean? Because I'm so passionate about it. So that's what really shifted me into the direction of doing this. I've been wanting to do it. Don't get me wrong, but that bull market coming around pushed it out again, because people started seeing the results. They're like, "Yo, what are you doing?" I was like, "Can you teach me?" I'm like, "Hey, I don't do that. I'm busy." They're like, "Yo, I'll send you the money, please." They'll force it on me. And that's how I got into fully setting up the academy and fully setting up a way to get people to get exposure to this knowledge through my courses and programs.
So I have another question here. It says, how do you feel about annuities? And because you're in the financial market, would you suggest annuities for African Americans?
Uh yeah, I mean, yeah. I feel good about annuities, but it depends on how much money you're gonna be putting in there. You know what I mean? So if it's a significant amount, it's okay. But I definitely think, having the money in the ETF/index fund is better, and the dividend stocks, because then when you get to an age when you're not necessarily working, you could set up a auto payment for yourself, right? You could set up, same like how you set up auto deposits. You could say, okay, I'm gonna pay myself 500 a week just to keep myself going while my money is still gonna getting compound at the same time. So it's good, but I think it definitely depends on the significant amount.
How does your academy differ from others in the financial education sector?
Um, so like I said, my academy, we focus on 3 ways to build wealth, right? Day trading and swing trading. So that's in the trading. Investing in stocks for the long term, passive income, capital gains. I basically investing in certain REITs and dividend stocks basically help you create your own bank. That's what I like to call it. And 3, we invest in the cryptocurrency sector. So I'd say what makes it special is the cost to be in my academy is just $36 to get all 3 of that information, right? We do morning calls Monday to Friday on Zoom, and then we do one weekly call every week where everybody comes on Zoom. We talk about this. I help everybody position their portfolio. I teach everybody how to position their charts, how to trade. We talk about things that's holding current members back, and we help current members get to another level. So it's basically an ongoing academy, and it's very beginner friendly. As Yeah, it's very beginner friendly, and it's designed to actually develop traders and investors. I've been in other financial education sectors as well, and I felt like I didn't get enough attention I needed to get my education going. So I had to do a lot of self education, a lot of reading of books, right? A lot of countless hours of Googling, YouTubing, just one piece of information together, right? So I'd say we focus on all 3 ways, and we have a strong engagement. We're very close, you know.
So with all this being self-taught, because you're saying you actually had to read to teach yourself this.
No,
What?
it's additional. It's additional just to get just from a always getting better perspective. You know what I mean? So it's
Okay.
like I want to always be able to piece it together all the way around. Why is this market gonna go up? Why is this? Why is it gonna keep going up? So it's just additional reading, additional information. You know.
So basically, you come up with your own model, and knowing numbers or learning numbers like you have that allows you to be able to move and shake whenever you feel like what's actually going to be trending a particular way.
Yes.
Okay.
Yes. So I'd say based on taking information from A, B, Z, and D and putting it all together, I pretty much came up with my own model of how to, maneuver the markets, right? So
Right.
that's pretty much it. That's pretty much it. There's standard models, but I come up with my own model. I'd say it's a more futuristic model, but it's pretty much the same, the hottest model right now. ETFs are in play right now. Mutual funds are higher in fees, so they've been falling down. Index funds was already superior. Now ETFs are superior, so we're investing through ETFs. The cryptocurrency wave, I actually have the experience in that market, and it's a $1 trillion market cap for the overall space, right? And if this ETF gets approved, we know, it's gonna keep going up. So pretty much me doing all 3.
It's
So
approved.
yeah. It's approved now, right? Because
Yes.
I
I'm
recently I
looking at.
recently saw.
I got the
uh
story right here.
oh yeah, yeah.
Yeah, the
So
SEC has done that.
okay. So I recently saw news that said it was their platform was compromised or something like that.
Well, they're still kind of like in the weeds a little bit, but it's approved. But basically, what it looks like is that it's going to have several different tentacles.
Okay, 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 okay. All right. So this is it. So as we progress in the year, the more and more FOMO is gonna kick in, the more positive news is gonna come out. So how the bull markets work in stock markets or cryptocurrency market is literally a market. It's like a business, right? So they release all the good news for the companies all the same time, right? So 2024, 2025, you're gonna hear about all the good things they're working on, all the merger deals they have, all the upgrades they have. They don't release those in the bear market because it's built in the economic system. So they're going to release all those in 2024, 2025, and it's also going to add to the FOMO that pushes up. It's the same cycle every year. That's what happened in 2020. That's what happened in 2017. Floyd Mayweather, they're boxing in the ring. They have the name of the thing on their jersey. So it's all marketing. So just look out for the marketing, and I'd say just be positioned. If anybody wants exposure to this space, I'm positioned. I pretty much told you guys the best gems. I'm not hiding. I'm not holding anything back. So
Well, we
we'll
definitely like
see.
that. We definitely like that because this is all about this financial education is what I want my audience to hear
Right.
because I know that there's just some things that a lot of that people just aren't privy to. And
Right.
I know sometimes when they want to do a lot of these things, it's like, where's a branch that I can just grab onto, learn, and move on with this branch. You know what I'm saying?
Right.
So
Mm-hmm.
this is kind of like, this is the difference in where you are right now today. That actually is giving some education to our folks because I want them to, again, once we get down to that very last question or the last segment of the show, I just want you to be able to put your information out there so they can have a way at least to reach you. If they got any questions, they can ask you questions, but also you can probably most likely give them the information to join Financial Clarity Academy. You
Right.
know, and so because
Mm-hmm.
I think that's a really good thing, especially to learn and to
Mm-hmm.
because I know that a lot of people are going to have to get down into the weeds of actually trying to learn how the numbers work.
Right.
Because I think of, when you talk about a model like you got, I'm thinking of two things. I'm
Right.
thinking of economics and physics. They're
Right.
both science and they both work like this. And so with them working like that, and it's all about numbers and it's all about the calculation as to where you get to that point, this is what people need to learn.
Right. I agree.
So, can you, in navigating the financial landscape, what key principles should individuals prioritize?
Right. So key principle is always, this is a principle, always keeping in mind to pay yourself first, right? And paying yourself first is before you pay your bills, like make sure you allocate a small portion of something for yourself. When it comes to investing in the stock market, you don't want to always run and invest in the brightest new idea, right? You want to invest in something with proven financials, a proven track record of making money, and that can keep making money over the next 5 to 10 years, right? So when I say that is, there's going to be a lot of different names and a lot of different, things out there that saying, okay, this is a new AI, and they want you to invest. But that doesn't mean it's the best ways to put your money, you know. If you want to be able to see your money grow over the next 5 to 6 months and you're still looking at it, you need to be invested in blue chips, as someone said earlier, the companies with the good track record of making money, right? And I'm still going back to the same names, the Microsoft, the Apple, the Johnson and Johnson, the Tesla, the Amazon, food companies. Chipotle is doing amazing, right? Those companies have positive cash flow, meaning they are making money from doing what they're doing. There's companies out here in the stock market that's in debt, right? They're still trying to get profitable, right? And it's important to be able to differentiate between the two. Once you differentiate between the few, which I'm telling you, some of them right now that's pretty strong. Tesla, great financial sheets. Nvidia, great financial sheets. Once you invest in those companies, your money will be there to grow. When it comes to taking risk, trading, you can trade companies like that. The newer companies like Square, the payment processor. I think they're promising, but they haven't really established themselves yet. Lyft, different companies like that. I'd say Amazon is also a good blue chip to hold too. Like, they have enough money to stay innovative and stay a big company. So it's just things to keep in mind. It's not always what they say, everything that glitters is not gold. I'd say,
All that glitters, not gold.
right. So definitely stick to stuff with proven track records. Like, they will keep growing. And that's pretty much the main things. I think I'd say key principle always, always stay learning, always trying to keep learning, always trying to get better. That's different from finance, but always learning, always trying to get better. Whether you're listening to a podcast, you're reading a book about finance, you're Googling something, all of that help. And it helped to shape me as an individual as well. That's why I have to, talk about that as well. The reading, podcasts, anything that keeps you growing, it keeps you accountable, keeps you doing the right habits to lead to financial success.
Now, this is the one thing that I want you to help the audience with, which is major. Could you demystify the common financial jargon? Those terms that are used that people don't understand. Like when you go into the doctor, they say these things you don't understand. Can you demystify the jargon, the words that's used, the terminology itself in general, to make it simple?
I can demystify. So give me an example of one, because there's so much, or one that you've heard of. Or I'd say anybody that's listening can give me an example of one, and I'd see.
One of those is like I can't remember. It was one of those top four. Is what I think it's either starts with a C or a K. I can't remember which one of them it was, but it's one of those top four. Can you kind of like break that down as to the name of that company and what it is that they do? I think you said Key Gargan or something. I can't remember exactly what it was.
Like in terms of so you're saying the big companies?
If it's a big company or whatever have you, because like when let's say like somebody like yourself that's actually been trading and you've been on the market for a while. So pretty much all of that terminology that goes along with that, you've learned that, and that's pretty much the way you speak.
Right.
I'm talking about how can you dumb that all the way down and simplify it.
Yeah. Okay. Let's see. Let me see. Let me think about it. So, yeah, simplifying it. I'd say, in terms of paying yourself first, it's basically if you make 10 eggs, right? if you get paid and you get paid 10 eggs, say you go to a shop, right? And you do work for a clerk and your payment is in eggs. They give you 10 eggs. Putting away one of that egg is putting away 10%, right? Of what you earn in order to grow a good financial nest egg for you and your family's future. It's from the book The Richest Man in Babylon. You guys can check that out. They talk about it, putting away no less than 1/10 of all you earn. So if you make $1,000 a week and you're putting away $100 in a low cost ETF index fund that's compounding for you, I would say it's in about 15 years. If you're putting $1,000, $200 away in a low cost ETF that gives 11% return, in 15 years you get just about $1 million. In 15 years, if you're putting 1,000 away. So if you're doing 400, right, away a month, you're looking to get $1 million in about 20-25 years, right? It really depends on your level of aggression. So there's certain words, if this is answering the questions, FOMO, right? That's a big word used in the stock and investment world. It's called fear of missing out. When you hear FOMO, it means fear of missing out. And that's one of the number one things that make smart investors be able to make money, because I invested in Ethereum right now, right? The FOMO has not kicked in yet. So I'm in with the smart money. So I got in during the accumulation phase of the cycle. That's when big institutions enter the market. So I'm holding now. So as the ETF gets approved, as the halving persists, Ethereum is going to continue to rise in price. So I'm in before FOMO. So when it gets to probably about 4,000, 3,000, the retail investors are gonna FOMO in now. That's when FOMO was created by a lot of news articles all over the media. Everyone's talking about it, and it allows a lot of people to jump in investments during the wrong time. The right time to jump into investments normally is when no one's talking about it. That's why Warren Buffett says buy when they're fearful, and then stay away when they're greedy. So it says, be greedy when you're fearful, and be fearful when they're greedy. Because when everybody's greedy, pushing the market higher, that's when a big sell is coming. But when everybody's fearful and they're selling their stock and the market's going down, that's the best time to pick up the right stocks at a discount. And when I say going down, I don't want to confuse anybody. The market has volatility. It goes up and down, up and down. Supply and demand, supply and demand. But it stair steps it way to new highs. So the S&P 500 is about 450 something now. I expect it to go to about 580 or 570, which is a new all-time high, by the end of this year, right? And that on its way there, it's not going to just go straight up. It's going to stair step, higher highs, higher lows, higher highs, higher low. You're going to get the volatility along the way. So that's just I'm just giving some knowledge. I'm just going. I hope I answered the question. But if you could probably
so pretty much that's when you get the FOMO. The FOMO is when they're fearful and they sell.
Right. So all right, FOMO now is caused by a lot of the mass media talking about the asset class. So if everyone's talking about Bitcoin, everyone's going to say, hey, why is it going up higher? Right now it's at 47,000, a new high. When it gets to 48, FOMO is caused by fear of missing out, like greed, that emotion. So
everybody's jumping in.
Yes. So that's the wrong emotion to invest with. So it strikes the greed emotion, so it makes it jump in at the wrong time. So that's what FOMO does. So when Warren Buffett said be fearful when others are greedy, that's when FOMO is going on. Everybody's buying in. But that's when the institutions and the hedge funds are getting ready to sell because they control the market, right? So they lure retail traders in, right? Retail traders come in with the FOMO, push the market higher, and then they say, hey, we're going to start selling now. They sell, start over the cycle again, and do it over and over, So it's built in the economic system, per se. So FOMO is without FOMO, traders won't make money. So we always have FOMO. So there's different types of FOMO as well. There's people that FOMO out of a position because they bought in at the wrong time. They bought in at 500 and the stock dropped down to 400 and they're scared and they ran out. And then when they get out, they look back at the position and it's up, 600-700. So it's both ends. You have FUD. FUD, that's what you call that. Fear, uncertainty, and doubt, right? You bought the stock at 500, right? You see the stock start going down to 450, 400. You start having fear, uncertainty, and doubt. That's called FUD. You sell out the stock, right? So people get FUD and FOMO all the time because they don't have that education bridge, right? To be able to help them to differentiate between the two. And that's what we specialize in over here in Financial Clarity Academy as well, because I'm in touch with everybody right through. As you see, I like to talk. I don't mind, I don't mind being in touch with everybody right through and giving them the knowledge they need to differentiate between the markets. So it caught me before. It's not like it never did, but I had to learn, pay my dues to the market. So yeah.
So do you have any parting words for our guests?
I'd say, thanks for coming out. I appreciate anybody that came out, and I hope the information I shared tonight is able to impact, your life in many ways. And I hope you can take the information that I gave you guys to, share with others as well that may need to know about this, So pretty much thanks for coming out. I appreciate you guys.
So tell our audience, how can they get in contact with you if they got any questions or concerns?
You're welcome, Don. Thank you. So you can get in touch with me via Instagram, which is my ticker symbol is Christoph, CHRISTOPH _investor, INVESTOR. So Christoph Investor, Facebook, Christoph Ingram, LinkedIn, Financial Clarity Academy, Instagram Financial Clarity Academy. You can go to Financial Clarity Academy LLC.com. You see that's my business website, and you can also email Financial Clarity Academy LLC at gmail.com, and I'll be able to be in touch with you. And I'll be glad to help you guys out. Any question you have, just let me know, and I'll navigate you guys.
Well, I definitely appreciate your time, and I do want to tell you this. Thanks for putting out your information because the shows are they go back and they auto replay as well. So those that didn't catch it now, hopefully they'll catch it later,
Okay.
and they can catch it on the many sites and many other areas that's located.
Okay.
So I want to thank you again, Mr. Christoph, for taking the time out to be here with us and to share this knowledge with us because I do think it's very important here at the top of 2024 that my
Right.
audience get to learn a whole lot more about this and we start putting ourselves in a position to be more financial sound and to grow even better financially.
Right.
So I thank you again for your time. I thank everybody for watching. The show will be replayed here or also on the YouTube channel, America in Black and White. And you can also catch it on Instagram, America in Black and White, as well as X or Twitter. So you all have a great day. Thank you again. And I hope that we can have you back again on the show.
For sure. I'll glad to be coming back. I'm glad to come back. Thanks a lot, Charles, for having me.
Yes, sir. Thank you. Good night.
Night.